Hey guys, I quickly want to go over my ETFs and my portfolio, so you guys kind of have an idea which ones I'm holding. And to be honest with you, I'm just holding one share of most of these. I'm trying to do my research and figure out which ones I want to put money in. And so, I would say I would not invest in necessarily in these ETFs. Um, but you could do your research. At least I show you which ones I have, and you have a pretty good idea what high dividend ETFs are out there. And so, let's see here. My ETFs start with UPRO, and UPRO is I am in 100 shares of UPRO, and I have invested in UPRO before. And I usually buy these triple weighted ETFs when they're down and ride them up. And so I usually get out of it when it's getting to a point where I feel like I'm comfortable owning it, because these things drop just as fast as you get, like a rock, when they're up there high. For example, this thing is down $43 from March, and you can see right there. It's actually climbed back up some, and so I've owned this before in the $60-$65 range, I believe. And so it just kind of gives you an idea. It does pay a little bit of a dividend, but I bought this stock to ride the up and also to sell weekly covered calls on it. So it's got a lot of implied volatility on this stock, so I could sell weekly covered calls and make a nice chunk of change every week. And so I just own one position, 100 shares. And so after that, TNA. This is another triple weighted stock I'm looking to create a whole position on. Right now I just have 12 shares, and look like I have 6 shares pending. It does pay a dividend of 1.628. It is triple weighted, and again, this one is also small cap, so it's going to drop even farther than the S&P, and all the mid caps and small caps do drop farther than the S&P 500 and the Nasdaq and the Dow. So looking to ride this up and then sell the weekly covered calls on this. And so I'm probably just going to have 1 or 2 positions in this, 100 or 200 shares, probably 100 here and 100 in my Charles Schwab, and try to ride this up. You can see it's been up, 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 up. So I'm just trying to ride it back up to the midpoint up there, hopefully in the somewhere around there, $50 range, maybe 60 if we maybe get lucky. It was around 75 when it dropped back in March. But I will sell weekly covered calls on it as well. And so that's TNA. And so those are my 2 triple weighted ETAs, and there's the reason I own them, and because I like where they're at as far as price goes. Believe me, if the market dipped again, this thing would fall in half. It'd be down to $10, which it was. Looks like right there, 10.09, 52-week low, just a few months ago. So it would drop in half, and I know that. And so if that happens, I will just hold on to it and keep selling cover calls on it. And so next stock, Global X Super Dividend. This is probably I would say, it says Robinhood says it pays 14,759 dividend. Robinhood's usually a month behind on their dividend payouts, and so or at least, I'm sorry, not a month. This is a monthly paying dividend stock. They're usually a stock payment period behind for their dividend payouts, and so I would assume it's probably a different number right now. And this, as the stock goes up and down, again, this is off from around $16. I owned this stock before at that range for a while. I just had a few shares. I have one position of this right now, and you can sell a covered call on it, which I have not done, I don't believe, since I've owned it. Oh, it's a monthly. That's probably why. Because if I sell a $10 monthly covered call by June 16th, and if this thing goes to $12, then I'd lose all my profit on it. So, at least everything over $10. And so, just to gain that $15. And so, that's why I don't. If I do sell a covered call on these monthlies like this, it's usually towards the end of the option cycle. So that would be around the last week or so, or a week and a half. And so it's SDIV. I do own 100 shares of that. Alarian, which is a buy by MLP, which is a buy by many people. It's in a spot where good place to own it. does pay a really good dividend. I believe you can't say covered calls on this, but Robinhood's not showing that right now. But who knows why? It is down, obviously, just like most MLPs. This is a pipeline ETF. So it's going to have ET, all of them, all the pipeline companies in this ETF. And so, and a lot of people have this as a buy, and I'm probably looking to add another 100 shares, maybe in this or in my Charles Schwab account. PEY, it's Power Shares High Yield Equity Dividend. We've got a 5.82 dividend according to Robinhood. I just own one share, I believe. Yeah, I own one share, and I'm trying to decide which stocks I want to, which ETFs I want to invest in, like long term, and to hold. And I definitely want to invest in ones that pay have a covered call. You could sell on them, and so right now this is a $14. It doesn't pay anything for the month. If you go to July, it does have a 28-cent. That's probably around its ratings, or its dividend date is probably what that is. That's probably why it goes up so much right there in that month. PUI, PFF, iShares Trust Preferred Income Sector, 5.85. PFF, and it looks like it just on one share. Again, I need to do my research on these stocks before I purchase any more of them or decide what positions I want to hold long term. I do that a lot. I buy a stock and then buy one share and then research it as I own that share and watch it and see the dividends are being paid, if they're monthly, if they're quarterly, if they're being paid consistently. And then from there I decide if I want to purchase more, and then also do some research more on the stock itself. If I own a share, I can usually remember to do that. If I put it on my watch list, it usually just gets buried. SPHD, I own one share here in Robinhood. It's a very well-known dividend stock. You can trade covered calls on it. Let's see. So the $31 strike price, June 19th, it's got a 78 cents per share they're paying. So if I would sell covered call on this, it'd probably be in the last 2 weeks, just to lower my risk as far as not gaining my max profit, and to just go from there. And if I do it right now, then I don't have to wait that extra 2 weeks to see where the stock is at. And so that's SPHD, a very well-known dividend ETF that a lot of people invest in. PGX, 5.5 on Robinhood. Power Shares Preferred Portfolio. I just own one share, I believe. This is a REIT ETF, SRET. It's a Global X REIT ETF. Most REITs are down, and most dividends are up. But who's to say if those dividends are going to continue to be paid? I believe this is a monthly payer, and I do own 12 shares of this. So I am looking to create a full position of this, at least one, and I do not believe you could sell covered calls on this. No, you cannot sell options on this stock. MDIV, I own one share. First Trust Multi-Asset Diversified Income, 8.5. Says for a dividend according to Robinhood. Who knows? That's probably incorrect, as most Robinhood dividends are. DIV. DIV is a Global X Super Dividend US ETF. It's got a 12.68. And let's read a little bit about DIV here. DIV tracks the equity weighted index of 50 high dividend, low volatility securities. The FNRA listed name for DIV is Global X Super Dividend ETF. So I own one share of this right now. Power Shares KBW High Dividend Yield Financial. It says it's 16.38. A lot of these dividends are really high in all these ETFs because the ETFs are down, and so they haven't paid their dividends yet, so they haven't readjusted their dividend to what they are going to pay. So I just own one share of this. SPDR, Portfolio S&P 500 High Dividend ETF, SPYD. It's got 7% dividend rating on dividend percentage right now, according to Robinhood. HYLV. This is a S&P High Yield Low Volatility Bond. So this isn't an ETF. It is an ETF, and it's a bond ETF. And so it's got a 4.5 dividend rating on it. Again, I just own one share, I believe. Global X Super Income Preferred ETF. It's got 6.69 as a dividend rating on this. I just own one share, and it's a very small ETF, only 10,000 volume yesterday. Global X Russell 2000 covered call. So this is an ETF, but basically what they're doing with these ETFs is they are selling covered calls on the stocks and collecting dividends, I believe. So tracks a market cap selected and weighted index along with call options for the underlying index. It's a Global X. I just own 2 shares, I think. Yeah, 2 shares. It says it pays a 12.836, and I believe it's a monthly payer. Global X NASDAQ 100 covered call. So I own both covered call ETFs that I've found. Let's see, it pays a 11.45 according to Robinhood. I own one share at $20.35. AG&C, I don't have a share yet. This is just kind of like PSEC. Very similar type of company. PSEC Capital, AG&C Investments. I like how AG&C actually, they actually are down less than PSEC Capital. And their dividend is pretty similar. Actually, I think PSEC's dividend is about 15. PSEC is paying its dividend, and I assume AG&C Capital is. And they're both monthly payers. And I might rotate my PSEC into my AG&C, basically rotating one bad stock for another bad stock. I like the AG&C better, one, because I think it handled the downturn better than PSEC. And I also can sell weekly covered calls on AG&C. So as you see here, May 22nd, right there. So it pays. So if you sell the covered call on the $13 strike price, which is right, I'm waiting for it to populate. So it paid 30 cents per share. So if you sold that, you'd get $30 for your 100 shares. If you went out to May 29th, you could get $36 for your 100 shares. Or if you went to that's the $12.50 strike price, my bad. If you went up to the $13 strike price, you can get $15 for your 100 shares for a strike price of your covered call. $13.50 is $6. And you say, well, that's only $15. Yeah, but that's twice a month you can do that. You double your dividend, basically, on this. I'm sorry. You 3 times your dividend. So basically, you'd get $30 a month. This probably pays around, if I had to guess, 10 to 11 cents per month dividend. And you're going to get $30 a month in your covered calls. Yes, you are risking your strike price being hit and losing your stock, or having to rotate your stock, or rolling it over for the next week and not getting your max gain. But in the end, a lot of these operate in a sandbox. If you could totally collecting that dividend, collecting that covered call premium over and over and over again, you're going to be usually better off in these type of stocks than you are just trying to buy and hold and collect the dividend. And so, and you can always go farther out. So like, you can just collect the $6 per every 2 weeks, and so that'd be $12 a month on this position. And so, there's a lot of options. So agencies, I'm probably going to take over PSEC for that reason. And so that's where I'm at. Somehow I'm still up on my Robinhood. I don't know how that happened. Kind of got lucky, I think. See, overall, it says I'm up $1,700 from the date. Most of this money I have in here, honestly, is my money I invested over the last year. The downturn obviously set me back. I made a lot of errors, and I've kind of felt like I have put a system together for myself that works as far as buying weekly covered call stocks, weekly covered call dividend stocks. And those aren't necessarily easy to find. And so you have to really do your research to find those. If you know of any, please list them. I prefer stocks that are under the $50 price range, so I could afford to buy a position. Because if it's $120, that's 12 grand to own a position in it. Where Pfizer's $38, $40, I can own 2 positions for that, and I could collect more covered calls. You're going to collect more income on your covered calls if you do this consistently than you will off your gains and your dividends, and probably 2 to 1. And so that's what I prefer to do. As you can see, everything I have is, not everything, most things I have are in positions, 100 shares at position. Maine does not pay a covered call. I bought Maine because I knew it was down about half price. I knew it would pay. I had a feeling it was going to pay its dividend. It is a monthly payer, so I paid $24 for it, and I figured for my $24 per share, $24.06, I would get my monthly dividend check as Maine goes back up for my $24 price that I purchased it for. So if it goes back up to 40, which I think it will eventually, then my cost basis is $24. And so for my $24 per share, I'm collecting that basically $20 a month dividend. And that's why I purchased Maine. And I don't believe that dividend is correct. I believe it is $20 per a month, and so it would be $240 a year, which would be closer to about 9%, I believe. So yeah, that's Maine. And so AIG, BP is down. It is paying its dividend, which is nice, and I'll probably hold BP. A lot of these companies have been paying dividends for years, and they're not just going to quickly just stop paying their dividends. It's because there's a downturn in the market. They're usually prepared for this. I mean, if it happens for long term, obviously something's going to change. But yeah, so BP is paying, well, I don't think that's the right number, but BP is paying a dividend, and I believe it's around $20 per quarter, which would be $80 a year. And so it's probably close to half of what they have listed there. EPD, Viacom, ET, 1,200 shares, still way too many. PSEC, 200 shares. And the rest, UPRO, 100 shares. SDIV, 100 shares. AMLP, 200 shares. And the rest are just onesie twosies. All right, guys. Thank you.